Good afternoon, traders. This is Tony D from Easymarkets in the Sydney dealing room. We've got an update for you today. The markets focus on the renewed Chinese-US trade wars with some heavy selling in the Chinese yuan last night, breaking above 6.7 during the European session. In the offshore market here, it's really the focus of attention, but isn't creating the negativity that it has in the past. You are seeing a lot of US dollar strength from this move in places which were a little bit surprising, given that immediately after the announcement stocks were weak. Those stocks did not finish as weak as they started, but they definitely had that downside pressure to begin with before the market was able to recover off lows. And that is suggesting that perhaps the negativity towards trade wars isn't as great as before, but the US dollar strength that we're seeing coming through was very substantial. So a little bit of a weird one in the price action world. Dollar yen in particular is very sensitive to risk moves, and a trade war announcement generally results in dollar yen selling. But we actually got a break to fresh multi-month highs here, and we have to respect this move as the dollar index itself is showing some very large strength, and all the US dollar pairs are showing bowing down to the US dollar strength in general. So it's a definite pro-US dollar move happening, but without any risk aversion that's aggressive at the moment. If you're looking at the stock market, the China 50 is surging higher. You're looking at the Nikkei, which has a relationship with dollar yen, and it is surging higher. Now that is an interesting setup, and it's a little bit confounding, but it's definitely showing what it wants to do. So US dollar strength and stock market strength is sort of what's being played out, and that's what you should respect and should try to jump upon. The pound was hit a little bit, but not as much as some of the other pairs. So you're looking at the pound itself. It did hold. Well, it attempted to hold the 132 level. It's broken back underneath it at the moment, but it did hold up better than most, as sentiment towards the UK is improving in general, with May surviving her Brexit challenge, and some of the data being decent enough for them to be raising rates next month. But if you're looking at the euro had a bit more weakness, and this is generally the case when you do have dollar-led moves, that the euro will bow to that. It's very hard to have the euro and the dollar strong on the same day. It's just one or the other. And with dollar yen moving so strongly, euro is always going to be under pressure. Not much really here going on though. Not really a major thing happening. No headlines really from Trump that have caused this. If anything, there's a little bit of optimism in the background that trade negotiations with Europe will end more positively than they did with China. At least they're speaking. China and the US are not preparing for trade wars to get worse before they get better on that arena. So one of the ways that you can play where it is respecting sort of what you think conventional logic is in this environment is selling the Aussie on rallies. You saw the heavy selling pressure there down towards 73.70. All right, let me just finish up quickly with the dollar CAD. Dollar CAD, they raised rates, but in the environment with strong US dollar, it was a little bit of a fake out. We did see the market break higher by the end of the day to 132. Oil is dropped back down as well, so CAD is under pressure from those two fronts. When a market moves like this on a day that they raise rates, it's not a good sign. Suggests that we can go higher still. Alright, we'll be back tomorrow for the final update of the week. Interesting markets though, so it is a good time to be trading. A lot of movement. Just try to stick with the trends. If you're not in the trends already, wait for pullbacks to get involved.